Well, hi there, Mike McKay here with Precedence Private Wealth. Just to follow up on the corporate estate bond, I'm going to give you one example of one of the tax shelters that we set up for a client. This client is a 40-year-old medical professional who's married. This client plans on working for about another 20 years and living for about another 50 years. So we're going to break down the three major advantages. This client has committed to tax shelter $100,000 per year for the next 20 years in their professional corporation. And I'm just going to compare the performance of that tax sheltering strategy versus a conventional $100,000 a year into an investment that grows at 7% and is taxed. Okay? So what ends up happening is, first of all, over the lifetime of those investments, the tax shelter saves the client $10.8 million in corporate tax. So can you imagine that? $10.8 million in corporate tax that you don't have to write checks, to CRA over the next 50 years while that investment sum is trying to grow. $10.8 million corporate tax savings. The second benefit is that in retirement, so at age 65, we projected how much income could the client get on an annual basis for 25 years. And after tax, of course, the corporate estate bond allows you to set up a tax-free income stream. And after tax, if you went the investment route, you could get $165,000 per year for 25 years. And then you'd run out of investments at age 90. With the corporate estate bond, your after-tax income would be $273,000 for the same 25-year period. So a remarkable difference, almost a 50% greater income in retirement, and you can imagine how that would affect your lifestyle and your future wealth. And then lastly, there is an estate value where the investment strategy runs out of money at age 90. There was a residual estate value that pays tax-free out of the corporation of $6.6 million, which is a huge, huge amount. Now, many clients feel that they don't need to have an estate that big, but if that same example was happening, can you imagine all the tax that needs to be paid on the investment that wasn't tax sheltered? And that $6.6 million will go to mitigate future tax and death, potentially go to your kids, potentially go to a charity. Whatever the reason, it's going to leave a much better legacy on the planet, leaves your legacy on the planet by having that much residual income. So you can see even a small commitment to a corporate estate bond can make a massive change to your overall estate planning, your income in retirement, and the amount of corporate tax you pay. Please call your tax advisor now to find out if your strategy is set up, and if not, have them call us, or you call us directly at Precedence Private Wealth. We'd love to help you set this up. There are changes coming August 1st, 2017, so it is important to move quickly on this. Thanks. I hope this has been of value.